welcome to another video in the Fundamental Analysis series. In the previous video, we covered the P&L statement. If you missed it, no stress. It's all up here. Now, before we jump in, make sure to hit that like button and subscribe to our YouTube channel so you don't miss out on any more exciting content like this one. Financial documents. Trust me, it looks better than it sounds. Anyways, in this video, we're going to break down the balance sheet, what it is, why it matters, and how to read it without falling asleep. So, let's get right in. Now, unlike the P&L statement, which focuses on how much money a company made, the balance sheet focuses on the company's assets, liabilities, and equity. Or in other words, say if we were to look at your financials, the cash in your bank, your laptop, or even your car, those will be your assets. The credit card bill that you haven't paid yet or your student loan, that will be your liability. Now, if you subtract everything you owe from everything you own, that is assets minus liabilities, what's left will be your net worth. In the corporate world, that's the value left for the owners of the company, or equity. Now, there's an interesting concept here. The balance sheet must balance, meaning the sum of liabilities and equity must be equal to the assets. Although keep in mind that this is not just an interesting concept. If this balance is not there, you might have encountered a potential red flag. Talking about the layout of a balance sheet, we primarily have two sections: assets and liabilities and equities. Liabilities and equities are usually kept together in the balance sheet. We'll discuss why this happens later in the video. Anyways, it is further broken down into non-current and current. Now, instead of boring you with the definitions, let's just directly see it from Bajaj Auto's balance sheet. Now, under the consolidated balance sheet, you can find assets and equity and liability. Oh, by the way, you can find the balance sheet on page number 218. Now, under the asset section, you can find non-current and current assets. Now, non-current assets are the investments which add value in the long term because they cannot be immediately converted to cash. Such as we have the property, plant and equipment. Now, these are like the physical properties which can be factories or machines or office buildings that Bajaj Auto owns. Then we have the capital work in progress, which is the money invested in construction or say some projects which is not complete yet. Then we have intangible assets. Now, these are the non-physical assets that still hold value. So it can be like a patent, a trademark, or even a software. Then we have investment in associate of subsidiary. Now, this is a very important aspect in non-current assets. This is Bajaj Auto's ownership in other companies, meaning the money that Bajaj will receive from other businesses. Now, when you add all of these together, you get a total of 27,545.32 as the non-current assets. Next, we have the current assets. Now, these are the short-term resources that a company expects to convert into cash within a year, meaning the assets which can generate in-hand money immediately, such as there's your inventories, which are the products or the items that Bajaj Auto is holding to sell. It can be raw materials or their manufactured products, which is bikes and other vehicles in this case. Then there are trade receivables. Now, this is like when a customer buys a vehicle on credit, EMI, and Bajaj is waiting for the payment. That's your trade receivables. Then there are cash and cash equivalents. Now, this is the money that is available immediately. Like it can be the cash in the bank or very short-term investments that can be easily turned into cash. When you add all of these together, you get the total current assets to be 11,798.37, which is added to the non-current assets to give you a total value of 39,343.69. Now, on the next side of our balance sheet has the equity and liability section. Now, there's an interesting reason behind why they are grouped together. Now, see, for a company to buy assets, they will need money, right? This money can come from either borrowing from others, which is called as debt financing, or from the owners and the shareholders of the company, which is called as equity financing. Now, debt financing comes under the liability section and equity financing comes under the equity section. And if you remember, a balance sheet has two sections. One which shows what the company owns and the other which shows what the company owes. Now, since both debt and equity is showing how much the company owes, they are grouped together. Now that this is out of the way, let's get back to our balance sheet. Equity, as we discussed before, shows the net worth of the company. under which we can find the equity share capital, which is the money raised by issuing shares to the shareholders of the company. Equity attributable to the owners of the company, as the name suggests, is the money owed to the owners of the company. All of this added together gives us a total equity of 28,962.42. Then we have the liability section, which is again split into two sections, the non-current and current liabilities. Non-current liabilities are long-term debts that are due after more than a year. Borrowings can be the loans or the bonds that the company can repay after 1 year. Sales tax deferral is the sales tax which needs to be paid to the government. Provisions are the amount which is set aside in case of a future liability, because we don't know what will happen in the future. And deferred tax liabilities are the tax payments which the company has delayed, so it's not paid back yet. Now this will be settled in the future, hopefully. Government grant is the money or the financial assistance provided by the government to the company. When you add all of them up together, you get the total non-current liabilities as 1,290. Next up, we have the current liabilities, which are the short-term debts that need to be settled within a year. Borrowings can again be the loans or the bonds which need to be paid within a year. Trade payables is the money owed by Bajaj Auto to micro and small enterprises. Now, micro and small enterprises, it can mean that it can be some raw materials, a vehicle parts, or a certain service. Then we have provisions and government grant again. All of this added together with the tax gives us the current liabilities as 9,091. Now, if you look here, if you add the total equity with the non-current and the current liabilities, you get a total of 39,343.69, which is equal to the total assets coming from non-current and current as 39,343.69. So, from a mathematical perspective, our formula is correct. Hence, the company's financial situation is in good order. And hopefully there are no mistakes in how the numbers were recorded. An interesting point to note here is that the balance sheet flows over time. Hence, when you compare balance sheets across different time periods, you will get to see a pattern. I know it's just asking you to do more work, but if you want to see whether the company is growing its assets, reducing its debts, or improving its equity, it's better to do this way. Anyways, make sure to check out the question bank, which will be in the description down below. And in the next video, we'll cover the cash flow statement. And I'll see you guys next time.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.